week week two, second week of the episode of the journey towards getting funded on our accounts. So currently our accounts are all in drawdown, every single one. The highest drawdown on the account of all the accounts are in 6% and the lowest is like 1%. So between -1 and -6. So currently, so I've have the plan, and we'll keep on going and making the plan. And I've actually changed some few things, and like planned of a plan of when when I expected to get funded. So what I think is that like I plan to get funded not this month, because I started the evals and the trades during the middle of February, almost in March. So it's been a full month, and a month and a half that I've been doing the evals. So currently not funded. I've taken the accounts to like close to 5% on the account just in phase one. So phase one yet is not done, but I've changed some plans just to increase the speed and to make it faster, and so we can get more out of it. So yeah, so therefore, now I've been locked in with my shit, back testing. We have all that shit, and just trying to be disciplined and follow our plan. So yeah, to get profitable and then to pass this shit. So let's get through the market and see what opportunities are in line. Starting out the week, today is the Tuesday, the 14th of April. So looking at the market, starting with USD GPY, that's currently on flow. I was just waiting here for daily to close. I'm looking to sell this on a retracement phase. Daily we've been closing here with a wick, huge rejection wick, bearish strength sign. We're forming a head and shoulders. We're taking this high, a double top high. We're taking this high straight, made an internal shift, retested. Now it's making a head and shoulder pattern, and now this shows a strength of bearish momentum. So I went into the 4 hour, waiting for a retracement. So now basically I'm just waiting for that retracement. We made a 60-80% retracement on the fib. So I'm just waiting to take some liquidity, make some internal alignments, and then I will be entering on might enter on this setup, aiming for a 1 to 2. So this might be a chance for it to execute. And then Euro GBP, waiting this to sell. We're now on an expansion phase within the daily high and low range, and looking for the daily to expand. This is the high on the daily, and this is the low on the daily, and we do have double bottom here. So we've taken this liquidity, retraced, doing. Now I think sellers might be selling, and we do see multiple pin bar doji candlestick, which shows momentum is dropping. So I'm just waiting for the 4 hour to align, because 4 hour right now is not aligned to be in sync. So I'm waiting now for the 4 hour to break this low, and then to make back up a retest, and then we'll sell down, or it makes it high, and then makes a low and low again, and then reverses downside, and then we sell. So I'm waiting for it to sell. GBP NZD price here, I was waiting for it to come a little bit more up. I didn't want to sell right here, because we do have a daily price is now bullish. So this is the low, this is the high on the daily, and here this is the middle zone. So I think this is too close to sell from a middle zone. So if for me to be interested to sell, I want it to come more deeper. I don't want to be selling right here. I don't want to be sell right here when the demand is quite some pips away. So I want it to come deeper. If it comes here, I get an entry here. If not, it breaks retest, and then I'll keep on selling from down here. But I want it to come more deeper so that sellers will push price down. So if this doesn't happen, I'll wait for it to come down here, and then to reverse, and I will buy it. And Euro NZD, is currently now bearish, waiting for it to retest at this golden zone, and then we'll be selling. Right now it hasn't done it. Euro USD, we see I was waiting for price to retrace here, it did not do, just broke out. Now it has reached its daily daily demand. This is a daily demand zone. It's a demand zone right here. So now I do think it might retrace now to make a daily high and low. That's where we're gonna be selling. So a daily high and low. So now we're high and high, high and low, high and high, high and low, high and high. So this might be waiting for a change of character, and then it sells, then I might sell. Now it's quite bullish, so I'll be waiting for this. This might be a setup for next week. Euro AUD, waiting for this to go bullish. 4 hours now, bearish. This is the low and high, and this is the low and low on the 4 hour. So waiting for the 4 hour to retrace, make a low and low, and break its low and high, and then retrace. We'll buy. I'll buy this, and then now just waiting for some setups to make some confirmations here. Yeah, now this is a good sign. Now we have this. I was waiting for a break and retest. Now it has broken. And now I'll be waiting for this leg into the key level, a retest. So now we made a change of character here, displacement. Now I'm waiting for a retest, and then I'll be selling from down here to the downside. So GBP USD, we have broken. I was waiting for a change of character. It doesn't seem to be stopping, so might be now this one. The interest will be to keep on buying. I saw some liquidity here, so therefore I was waiting for it to take and then to make a change of character. But now we'll see how it will react. Next one, we have USD CAD, waiting for it to market shift. Now it's bullish, waiting for it to go bearish either here or here. USD NZD USD, waiting for it to go bearish. Now it's bullish, haven't done anything yet. CHF GPY, waiting for it to go bearish, haven't done anything yet. CAD GPY, waiting for it to go bearish, haven't done anything yet. LZD GPY, waiting for it to go bearish, haven't done anything yet. This was all the pairs, so we'll see what opportunities will come, and I'll touch on you in a bit. Hey yo, quick updates. I just entered on this position here, retracement phase, 4 hour. So let's see how it goes. Hope for the best. Welcome to a new week. It's a new week. It's end of the week. Not a new week. Sorry, it's end of the week. We're still on the same current week, and we were just some days ago on the execution on USD GPY. So that did go quite okay, but we didn't lose. We didn't majorly lose. We didn't majorly profit, but still we slightly profit, if it makes sense. But we'll go through how this setup went, and the week, in overall didn't have so many opportunities at all. This was the only trading opportunity we got for the whole week. Week was quite of wasn't showing that much of opportunities, but we stayed true to ourselves, our strategy, our plan, our system, and discipline. Didn't change a dime. So that's what it's all about. So let's go through the week and see how everything went. Let's get it. The week, here is the USD GPY pair trade that we took, and as you can see, we got motherfucking did it. Price took us on the stop loss, and then went through our TP, take profit. But we'll go through. Still, we didn't lose, but we still got a slight profit from the trade. Let's explain why in detail and what happened. But starting from the week, reason why I even got interested on this setup was because of we were reaching a higher time frame weekly resistance, major resistance, which is slightly a kind of supply zone on the weekly. You can even see here on the monthly the supply has dropped very high from this point, so it's a kind of high supply in this area. So that alone sparked my interest. So I got interested and went into details into how the weekly was reacting on the zone. So we saw here that price was trying to give some bearish signs, but it was struggling. He had some holdings, like buyers were still holding price, like sellers were trying to go down, but it shows basically indecision in price. So when price reaches a specific area, and then we do see a kind of indecision starting to form, and price has basically, in a way, in this case, retested and shows indecision. That signifies that price is starting to lose momentum. So in this case, it means that the buyers that are stepping up into this key level are trying to they're basically having force. So something is forcing them to not keep going, and that's the selling pressure. So that is a clarification for me that sellers are on this level might be interested to sell price. So now we were also the reason also that according to the fib we are premium. This is the 50%. We are above the 50%, which is premium. So that got my interest in selling, and I went into the daily and saw that daily was bullish. So this was the high and high. Now this was we made here. This was the low, high and high, high and low, and then we made here a swing high. So price is now about to correct itself to make its swing low here, and we are selling this entire low. So therefore I wanted to sell. So I went into the daily. I started to see some patterns, formation patterns, and I saw head and shoulders. So the head and shoulders, the left head, right shoulder, as you can see here, left shoulder, the head, the right shoulder, and then we started to form some candles in here. You can see here, left head, right shoulder, and then we have a neckline. So that forms a reversal pattern. Head and shoulder is a reversal pattern. So I got interested, and then I saw also price was here hesitating, take some liquidity, in which we will go into details, and reacted with a major engulfing. So we retested up again, gave another reaction in engulfing, and then also see price engulfing. So there's supply in this area. So I was interested now in selling, and also daily is also on a here premium. We are now on buy. When price is bullish, premium is always above. When price is bearish, premium is always above 50%. Above 50%. So here we are above 50%, which means we are in premium. So when price is always above 50% is premium, below 50% is always discount. So here was premium. So we have daily, and we have weekly in premium. So that have confirmed my bias on that I want to sell. So for me to sell here, I need the 4 hour to be bearish. So I went into the 4 hour. We saw here real quick that price had went here from bullish, and we made a high and high, high and low, high and high here, high and high, high and low, high and high. We made low, high, low, high, low, and now high, and then it's about to make it slow. Then now it's made it slow, but we were still bearish at this point here. At this point here, before when I took the trade, we were here bearish. So here we were bearish. We are from bullish. Now 4 hour is bearish. Now we have 4 hour in line with our bias, and then also we need the 1 hour. But more detailed into the 4 hour, we do see liquidity here has been taken, and this reaction came, retraced up, corrected up, and then we had a 4 hour key level, price hesitated and dropped, and here internally the 1 hour went in line. So we see on the 1 hour here, I do see 1 hour go from bullish to bearish. So here we need 1 hour to be bearish also, with now the 4 hour. So it's high and high, high and low, high and high, high and low. We had a little high and low here, and then price makes this high and low. So at this point, let us have our replay. So at this point, we do see price being bearish. We do see price being bearish. So from here, I have my weekly, daily in premium. We are in the weekly key level resistance, and we have the 4 hour now being bearish, and we have the 1 hour now also being bearish. So now I have my bias in line. So now I know that I want to sell. So I wanted to find my key level. So here we know that we retested into our key level here, and then we've dropped. So now when I got the 4 hour here, made this trend of character from bullish to bearish, I went into the 15 minutes to find the lower time frame key level for it to retest so that we can sell. So in this case we went here, and this was, you see here, this was the high and high, high and low. So I found a swing point. This was swing high, all this was swing low. So we want swing structure to be aligned with our 4 hour. So the 15-minute swing structure has to be aligned with 4 hour. So this is the swing high, swing low. Now we are correcting. Now we know that we are aligned. So we want the price to come here and sell. Why here? Because Fibonacci, it says this is a 60% level, golden level. So price retested. We want price to retest at this golden level. We find a resistance to sell from, right? So we have both this here, this zone is our 15-minute level, and then we have the 4 hour also, because we're still inside the fib zone. So this is still also counts as a key level, also the 4 hour level. So after that, waited for that retest, for that retracement on the 50-minute. Price went up, corrected, and then boom, came up here, and I made an entry on this engulfing. Price hesitated a little bit here, we corrected, hesitated, and then we got this drop engulfing, and I entered on this engulfing on M1 to 2. So I entered here on the 1 to 2. So now I entered on that 1 to 2, and then to keep going here. So now once I entered on my 1 to 2, I just waited for price to play out, and now I had, you can see this red line is here. This was my stop loss that I trailed to, but firstly my stop loss was, my stop loss was here, and my take profit was not here at 1 to 2. It was here exactly on the 1 to 2. This was my TP, this was my stop loss. Why here? Because this was the swing high before the change of characters. This is the high before the change of character move. So this is the swing high, or this is the impulse correction. Swing high has to have an impulse and correction. This is an impulse, this is an correction. So this is swing high, and this now is the swing low. That is breakout structure. So now swing high and swing low. So what happened? Let's see. Price goes, it melts, goes down. What happens? Boom. I got an alarm, and here, because of its retracement, I put a 1 to 1. Basically here on a 1 to 1, I take a 50% partial. So I took a 50% partial here on a 1 to 1. So this makes me basically risk free on the trade, because if I, let's say, if I risk $100 on this trade, let's say this whole 1 to 2. You see this whole 1 to 2 here is a $100 risk. Okay, let's say, for instance, for now. So now this is a $100 risk. If I take a 50% partial here, if I take a 50% partial, which means I will half my risk on 50%, and I will take 50% in partial. So which means I will risk $50 and I will profit $50. I haven't guaranteed the profit until I've traded my stop loss to break even, but still I have the $50 profit in partials. So now if here in the 1 to 1, let's mark it here. It's almost at this break even. So let's basically say here, let's say this break even line, it's our 1 to 1. Alright, so now and the 1 to 2, we have it here, 1 to 2. So now this is the 1 to 2. We have the 1 to 2 area. So now let's say price now does this. We have, this is the swing high, this is the swing low. Okay, so now if price is not swing high, swing low, you see this, which means my stop loss was here at first, and I trailed my stop loss above the swing high, 15-minute swing high, because 15-minute is it's the 4-hour low time frame pairing. I follow the low time frame pairing, structural pairing. 15-minute is pairing, is the 15-minute is the low time frame for the 4-hour. So if we speak correction, correction phases, 4-hour is low time frame, correlation is the 15 minutes. So therefore I use 15 minutes for the 4-hour structure in this point. So this is the swing high, this is the swing low. So here I put my trail my stop loss from down up here all the way down here above this swing high. So this now is the swing high, this now is the swing low. So which means now if price takes me out, let's say now, because now I'm still risking a $50 on this trade, not 100, because I've halved my risk. So which means if price comes to my stop loss, I will lose half of my risk, which is $50. So now price comes here, if I lose, price comes to my stop loss like this, I will not lose $100, I will lose $50, right? But have this in mind, we took a $50 profit. So what's the math? If we lose $50, and we partial profited in $50, was 50 minus 50. It's 0, which means we lose 0 on the trade. So it's basically a risk-free trade. If you get it, you get it. So this trade, even if we take common stop loss, we will not lose on the trade because we have $50 in profit. If price comes to stop loss, that $50 in profit will not be a profit anymore. It will be a loss because now our risk is $50. Our risk here is $50 and our profit here is $50. This minus this is 0, is equals to 0. So here price would have made us break even, but because of we got the stop loss trade from up here, we trailed it to down here, we secured some partial profit. And now price, what did price do? Price did this. Price did this and took us out. This red line right here, this red line is our current stop loss. We trailed it from up here to this red line. So now we got stopped out. So even though price did not reach our take profit, still we profited on the setup, the trade, So at this trade we profited $150 and the risk was 2%. So for real, if we did not at first trade our stop loss, price would have done this. Price would have done this, gone up, you see, and then straight to TP. So which means indeed we would have not lost the trade, but we would have been break even. So our $50 risk would be lost minus our $50 partial profit. It makes it to 0. That would be now a break-even trade, no loss, no win. But because of us trailing our stop loss to here, because of us trailing our stop loss to down here, we trail our stop loss now to down here. Let's make this show more clearly. So now because of us trailing our stop loss to down here, at this point above this swing high, above this swing high, 15-minute swing high, we traded above here. Price took it out. From up here to up here, we secured more profit. Basically, the more we trail our stop loss to break even, the more of the partial profit we've taken we secure. So here we secured $150, which was the partial profit. So we minimize our risk and we got a profit from a partial profit. So basically it was a free trade. We got a free trade, free profit. So yeah, so what do we learn from this setup? From this setup, indeed, what we could have done better was price took this as a liquidity, because this was an Asia high liquidity. We can see here was an Asia high liquidity that made a chain of character, which is very liquid. And me initially, what I'm most comfortable with doing is, what I also advise is always to try to have your stop loss above a liquidity, a taken liquidity. So basically, if for example, let's say here, if price, as this case, you see here, it does this, and then it does this, boom, right? So price does this. So basically, instead of having your stop loss like this, as I did, just not even like being aware of the liquidity. My advice is to always try to be aware of the liquidity near you, and once you've been aware of the liquidity, either you wait for it to be taken, or in this case, always try to wait for liquidity to be taken before you have a confirmation to go into an entry. Because why I even took this entry was because we did have a liquidity here that got taken on the 4 hour, as I previously mentioned. This was the high, this was the low on the 4 hour, and liquidity took it up here, and then price melted. So that was my confirmation of, okay, liquidity has been taken, therefore I can enter the trade. So yeah, so now I entered the trade. What I was not aware of, that I was having my stop loss. The next rule is always, if my stop loss now is not above that liquidity that has been taken, which was on the 4 hour as I just showed, then my stop loss has to be, if it can't be above the liquidity sweep, the sweep of that liquidity, then my stop loss has to be above a swing high low point. So in swing high point, what I mean is basically I always try to put my stop loss where if price breaks that swing high, swing low, price should not go to my TP. Instead, price should reverse to the opposite side. So what I do is, like I say, is always try to I have two kind of loss scenarios. The one is a bad loss and a good loss. A bad loss is this would be a bad loss if I wouldn't have taken a partial. Why? Because of a bad loss, I take it as price takes my stop loss and then goes to my TP. That's a bad loss. A good loss is price goes to my stop loss and then reverses to the complete opposite side. That's a good loss, which means I was completely wrong on my bias. That's the kind of losses that I want, not this kind of losses. That price takes my stop loss and then goes to my take profit. That's not a good loss. It's a bad loss. So for you to prevent these kind of scenarios to not be liquidated and then price goes to your TP, solution is to always try to be aware of where you're putting your stop loss. So basically try to be aware of where is the nearest liquidity that price has not yet been taken. So for me at this case, which I did not be aware of, because I saw this previous 4 hour liquidity up here that was taken up here, this 4 hour liquidity up here that was taken. I saw that as a confirmation that okay, price should just continue, it would not be more greedy for more liquidity, so therefore I can afford to have my stop loss above here. But indeed that would have resulted in a basically loss, a break-even, as we will say. So price would have taken us on the stop loss and then go to our TP, because now I was not aware of the liquidity that was laying up here. We made a trade of character, it was liquidity, so it would be in a break-even. So my advice for anyone is to always try to have where you put your stop loss, always try to be aware of the nearest liquidities that are surrounding near your stop loss. So in my case here, we do see this is a liquidity, the red one, and this is the liquidity, the other red one. Can I remove this to make it more clearly? You see, we have two liquidity points, this red and this red. Why? Because this is the high, this is the swing high that breaks the chain of characters, so it's liquid, it's an initial liquidity. And also this high here, this high it's a double top, double session liquidity. This high and this high is also liquidity. So also another advice is also try to mark not only one liquidity. You think that okay, I have one liquidity here, price should always only take this one. No, try to find several liquidity clusters and mark them and wait for one to be taken and see how price reacts, because you never know. You're not the one that's going to decide. You're not the one that's going to be deciding when price should go up or down. Who controls most of the price is the big money, the institutions and the banks. So we want to follow the banks, we want to follow the institutions, not the retailers. So for every buyer there must be a seller, for every seller there must be a buyer. In this case, if we want to sell, we have to take out buyers. We have to make buyers step in the market. So how did the big players plan to execute this trade? Because we do see high supply come in. This was a big melt, so which means there was supply on this setup. So how did the banks and institutions plan this setup? They said, okay, we have liquidity points here, so now let us make a fake out. So let us make an high and high. Buyers will think now this is a bit bullish setup. They will start buying up here and will form an engulfing. Boom, you see this little engulfing, and now buyers will what? They will buy from this level. All the buyers will stop buying. So all the buyers will stop buying from this level. For every buyer, there must for every buyer there must be a seller. For every seller there must be a buyer. For every sell there must be a buyer. For every buy there must be a seller. So here the engulfing, the bought, stop loss over, they bought price up. Now price made a high and high internally on the 50-minute. This is for the high and low. So as we can see, let's go into the 50-minute. We can see how price broke this previous structure. You see, price broke this previous structure. See, this is the high, broke this previous structure up here. Zooming in, we broke the previous structure. Now this is the high and high. So now normal retailers would think that now price is bullish, therefore I'm going to buy. So they find a support, this, that, blah, blah, blah. They put stop loss beyond, and they have a target. And then price goes against them. They say, what happened? And basically, yeah, you got faked out. So it's a fake out scenario. Fake out is an inducement. So in this case, we were not aware of the near liquidity, which would have resulted in a stop loss hit. So my advice is, if your stop loss can be beyond the initial liquidity sweep that you first noticed, then if price now is forming another kind of setup below the liquidity point and your stop loss can't be above that liquidity point, always try to find or wait for more liquidities. If you can't be aware of find liquidities, then have your stop loss. What I would have been doing different in this scenario, I would have found the liquidity. For example, I'll say, okay, this is the liquidity 1, we have this is the liquidity 2. So I'm waiting for the liquidity to be taken. But even if price haven't been taking liquidity and I now did an entry here, I would have marked these 2 liquidities. I said, okay, I'll have put my take profits slightly longer, and then I will increase my stop loss to a more beyond the point. So now I would not been taken out, I will still be entered inside the trade, and I will still be in the profit. Now if I didn't trade my stop loss, because I did trade my stop loss according to the plan and according to the, so I will still be taken out there in a way. But we just say, for instance, if this case didn't happen and we didn't correct and make swing low, and the new swing structure didn't be formed, then let's say this will be the initial first swing point. So in this case, I would waited and then found a liquidity for me just to be aware, so that because the reason, if I'm not aware of that, I might have my stop loss too tight near liquidity, I will be the liquidity. So the frame goes, the quote goes, if you don't use liquidity, then you are the liquidity. If you don't use the liquidity, then you are the liquidity. So always try to be aware of the liquidity where you're putting a stop loss. If you don't use liquidity, then you are the liquidity. So always have to be aware of where the liquidity sits, in case, okay, we have taken a lot of liquidity here, but in case price wants to take this liquidity, let me just have a higher and bigger width, stop loss width. So in this case, we would have increased our stop loss up to here, and price reached here. So see, our stop loss is up here, so we wouldn't have been taken out. As you can see, it wouldn't have been taken out. So that is what I will have done differently. So my advice is to anyone is to, when you find your stop loss, put your stop loss, always be aware of liquidity, which means, am I putting my stop loss where the liquidity is? Because if you do and you're not aware of that, you might be the liquidity that might get swept, and then price will go to your take profit, like in this scenario, like in this scenario where we would have get swept if we had our initial TP like this. So like this, where we would have get swept and price would have gone to our TP, straight to our TP. Let's say now if we did not take our partial, we would have get swept and would have gone to TP. We did not take partial and we did not trail. Let's say, for example, if that case happened, we would not we would have lost this trade basically, because our stop loss was too tight to the liquidity and we were not aware of it. So either there's two scenarios. Maybe if we could have now, even let's say I did not take an entry here, but somehow I took, let's say somehow I took this entry here, and then I was aware of this liquidity and I said, I bet, let me increase the stop loss, and then I can still, my risk to reward is still positive, I would have taken it. But now let's say my risk to reward is not positive, then I would have waited for the liquidity to be taken, react, and then I would enter on a more like tighter stop loss or something like here. Then I would have my stop loss here, aiming somewhere. We've learned quite some few things, and which is to always try to be aware of near liquidity always before you set your stop loss. Not only stop loss, but also in a way, kind of my advice for anyone that sees the watch or is to always try to have liquidity also to as a bias, because if you don't lose liquidity, you are the liquidity, and which means if you don't use liquidity, you are basically a trader, a person or something, retailer, that you're not trading with what the big players are majorly in need for, which is liquidity. Why? Because they have major orders. Imagine having hundreds of millions trying to put it into a market, billions trying to put it into market. Your orders will not get filled at the same level. Let's say there's a key level here and you want to enter in here. You want to put 100 million at this order. You will not be able to enter all your orders will not fill all at the same price. It will be like laggy. When price moves down, your orders will not directly execute for you. For example, when you have your phone, your Meta MT5, you're trying to execute a trade here on your eval, your trade, your funded, your live, you will you press market execution, you will directly enter your order at this place, but versus them, they will not, because there's not enough liquidity. So that causes price to keep going down, and they lose they lose, like they lose they lose they lose precision. Their entry will be laggy. Their entry, like first entry will be here, like let's say they want to sell to this downside, and then now there's a key level here, right? For example, let's say, let's put this example. This is a resistance. Price reacts, price comes up here, retests here, and then from nowhere now price wants to sell down. But now they sell the 100 million in this market, and then price will keep going down, but not all their orders will be executed in this yellow mark here. Yours and the phone, you have your 100k account, you will market execution will make you enter in this yellow area. But them, their first order, their first maybe 1 to 10 orders will be, let's say 100 million they want to enter. First order will be entered here, second order will be entered here, third will be here, fourth will be here, fifth, sixth, seventh, eighth, so it will be laggy because there's too many orders, too much money. So therefore they need liquidity. So you put your stop loss up here, therefore they say, alright, we need liquidity for us to have that precise entry so all our orders can be at the same place. Otherwise our orders will be away from each other. So therefore we need liquidity. So majority of people had the liquidity above this point. So everyone is having the liquidity here. So now they say, alright, let us take price, let us buy price, take all the liquidity, right? Now they take all the liquidity, and then now we can enter here, put our stop loss above this liquidity, and then we can sell price. All our enters will be entered at this level. Here where I have my finger mark, all the orders, our remaining orders will be entered at this place. So let's enter here. I have a stop loss above the previous sweep. So now they enter, and then now they sell down. Boom, price melts. So therefore you have to use liquidity, my advice, and you also have to be aware of the liquidity, because if you don't use liquidity, you are the liquidity. So always try to understand the liquidity, because I've been trading for 3 years now. Once I really got in touch to liquidity, and I understood liquidity and why liquidity needs moves. Liquidity is what drives the market. Without liquidity, the market will now go up and down. We need liquidity. So understand liquidity is my advice for anyone. Really understand liquidity, and learn why it's taken, where it's taken, and how it's taken. When you have those kind of questions, you've answered, the reason behind everything, you will be so sharp in your trading, I promise. So understand liquidity. So in this case, even though I was aware of the liquidity, I wasn't aware of where liquidity was remaining, where I put my stop loss. I was not aware of that. So I should have been aware of, okay, I put my stop loss here. Is there any liquidity in case of I have my stop loss too tight to that liquidity? Yes, there is liquidity. Okay, let me put it a little bit more up. Then let me increase my take profit a little bit so I can have more width, space away from the sweep, the liquidity, in case price wants to come and take liquidity. Who knows? Because if the big players if they want price to go up, price will go up. But if you want price to go down, if you want price to go up, price will not go up. So literally what I mean is you can't control the price, but the big players, whatever they want, it will happen. Whatever you want, it won't happen. You get me? So therefore you gotta trade with the big players, not trade against the big players. Always be in line to try to say, okay, what will retailers do? Okay, they will buy. Okay, let me sell. So everything, when you buy, where retailers buy, when everybody see buy, you sell. When everybody sees sell, you buy. You will make money, believe me. So the thing what I would have done differently on this setup is to learn and be more aware of slightly directly when my stop loss is not above a liquidity sweep. In this case, it was not above the liquidity sweep, because my rule is always try to have above a liquidity sweep. If it's not above a liquidity sweep, then always try to be aware, conscious and aware of, ask yourself, is the liquidity near this level? Yes, let me increase my stop loss, let me maybe do this, do that, so that I try to find ways to not get swept in case. So maybe increase it and make it bigger type shit, something like that. Or no, there's no liquidity, I bet, let me just put it here, but don't have it too tight, because price could still might break the swing structure to make a fake out inducement. So always my advice, basically, don't have a tight stop loss, always have width, and in combination with that, be aware of liquidity. So that's it for this week, that's it for this episode. That's what I learned, what we did. Next week, hope to be keep on consistently making profits. And this week was basically a W. It was $150, not a lot, but it's still something. I'll take it. But it was an eval, not like not that I did the profit a payout, but it was just a profit on the eval. So the current evals right now is like, I've written here down here, is the first 25k accounts. The highest drawdown on all the 4 accounts is in the 10k accounts, which is -6, and now we are break even on a highest account. Profit account is break even, 25k account. So I'm between 0 and -6 in draw in account balance. So the first 25k, I have two 25k and two 10s. So the one 25k is at break even, the other 25k is at -4, and then the two 10k accounts, one of the 10k accounts are at 2.5 -2.5%, and the other 10k account is at -6%. So yeah, so now we'll basically break even on one account, and the 3 of the rest are in drawdown. So yeah, so I've seem to hope to be keep on going and making it more profitable and keep the accounts, so that next week hopefully we can take 1 or 2 accounts to above the break-even point and up to profits near 5% almost. So yeah, so appreciate for everyone to look this week, and I hope to be going into the next week with positive mind, more executions, more consistency and discipline. And let's get it. Hope to see you soon.
Plug.